Hello traders, this is Alex with the Matrix program. I'm going to do a little different. Again, this is my X account, CBOTman33 is my handle. This is where I update a lot of stuff, stock and commodity related, and what we review today will be on here as well. I'm going to do it a little differently. I'm going to set up, kind of divide it into grains, ag, and then the rest of it, kind of divide it in two different videos in case you're not interested in the whole smash. It'll be a lot shorter for you. And if you want to listen to both, you can. So we'll try that. It might not work, but we're going to give it a whirl. Let me get into the the Matrix program. Hang on. Okay, we're in the Matrix program itself. Hang on, a train's going by. Judas. Okay, sorry. Freaking train. Must be a newbie. Likes to honk his horn a lot. It is about 11:42 on a Thursday, June 4th, 2026. This is the Matrix full sheet. Again, we're going to break it down into orange juice on the ag sector, and then the rest of this will be in the second video forthcoming. Now, the next current zone is June 8th. Now, that June 8th happens to be a Monday, so, and then it kind of slides back into the weekend mode, so it'll be kind of interesting. It's a little longer data frame, so the quarter moon will be interesting, right, because it has an extra day, basically, of data. And, of course, things are a little volatile in the ag sector. Right now, our volatility to our current stop level, the only thing we're profitable on right now is the nat gas and the gold. All the rest are basically losers. Not a bad risk appropriate, but of course they didn't start out that way. So the biggest gainer since the winter equinox is still the silver, or crude, excuse me, at 63%. One of the biggest losers is Bitcoin, down 21%, again from December 21st, right? So that's interesting. Silver's a meager 10% plus. Wheat's still up 13, even though it had a pretty good correction here. So interesting, right? Keep that in the fourth out of your mind. All right, now let's move to the corn. Again, we'll do the ag sector first here. And this is the matrix chart. Again, using the quarter moons for time and the square of 9 for price. And you can see it just, I rolled it now from July to December. And this is kind of important to me by doing this for this long and how many decades I've been trading it this way. This is where the July low was, right? And we rolled it. So DC is, down there going down with it. I find that pretty important. Now it doesn't mean you can't take it out, right? But kind of an area of support, either above it, below it, or on it. But kind of broke out of this crappy sideways chop pattern that we've had now forever. So I don't know, just a dud. Let's move on. Here's the beaners. They've also broke support. Kind of went through the solar eclipse close area, which it's only a couple boxes through it, so I'm not real convinced. The low of that, again, July low was this right here. So we're kind of on the solar eclipse low portion of it. It looks a little ugly. We're kind of on the back side of this 1-to-1 squared out. It just looks heavy though, right? We couldn't get going. Didn't make a new high. Failed. So truly in a chop pattern. And this secondary event did occur on the 90 degrees over from the solar, right? Gann zone, what I call the matrix zone. And I use 66 market days, right? Gann did not, but kind of a similar deal, right? 90 degrees over in between the two solars, right? So looks pretty weak stick at the moment, but I like where it's at. If I was going to be a buyer and just play around, I would buy it here, maybe risking, maybe down here at 1122-ish. Here's the wheat. Again, kind of rolled over. I mentioned, again, this one also made a high on that 90 degree zone or the matrix zone. I mentioned this in every video. I don't like buying wheat until we get halfway through harvest. So we've had some other issues now, a little too much rain. So poor boys can't get a break. But again, wait patiently. Now, if you had to buy it and we're playing with it, I would buy this trap area, right? This previous swing where the stops are getting hit. Again, this is D's, Z is D's. So this is a true stop area around 606. I'd buy it, buy it there, maybe risking a couple more boxes down to 594. Or, you buy the futures with a put, right? Buy 5,000 bushels, one contract, and then buy one put. Or if you're kind of neutrally negative, then you can buy two puts, right? But play in the trap area, that kind of thing. Really no place to sell it, right? It'd have to rally back quite a ways. So really the only play is playing around with the long side down in here somewhere. Here is the meal, just a chopper. We did bust it. We did have a trade here. I forgot to put those on our sheet, so that sheet isn't right. Oh well. Here's again, just at the solar eclipse close, kind of a similar deal. If I had to buy it, I'd probably snap a new low down in here somewhere, and then maybe, well, from that low, you can almost risk the lows on the meal, or maybe a couple boxes down. Here's the cough. Like I've mentioned before, this is a puke stick, just a slow cratering deal. This rally that should have caused a tremendous back rally did not. You know, the solar eclipse high was a high here. Midpoint was sideways. Solar eclipse lower was a low. This midpoint we just got, you know, the 90-degree was also a chop, maybe even a little lower, which told me to be careful. It probably was going to sag and continue down. Coffee has notoriously been a fast trader. Margins are high enough that you shouldn't have too many weak sticks in there. You know, the margin bands are a lot more instantaneous than they used to be back in my day. Trade 10 days on call, 12 days, no big deal. With Revco, it could be 20 days on call, no big deal. Nowadays, it's 2 or 3, you got to have money in, right? So again, it keeps the market cleaner. So it shouldn't have as many issues. Hopefully, everybody's rolled out of July. You don't want to get caught in deliveries on coffee. Here's the cotton. The bull we had turned into a bear now, kind of a V-top. Again, where? Right on the zone of Gann zone. So that 90-degree from the solar, you know, I think it's going to correct all the way back. That's a tendency of these markets. You know, you got to plot obviously 50%, but more likely it'll be like 62 to 70. Oh, let's call it 65%, somewhere in there is the tendency, and more than likely it'll break back past this old high. That's too obvious. It'll probably get done in here somewhere. That's the tendency of a mild bull breaking back to a level. Here's the sugar, just a chopper. I had high hopes that this was going to be a massive fast pivot. It turned into a squashed bug. If you still have 4 of those remaining call options that we kind of talked about, I don't know. You know, if they got some value, I'd get out and make your money. If you still got them. Again, the time zone now, right? We were looking at this as the speed zone, and now it looks. Well, let me spread this out a little bit. Hang on just a second. You don't need to see all that crap up there. Yeah, this was the speed zone that I was hoping it would break. Again, hope, if you're using hope as your trade method, that's why you use the options like I did, quantity over quality. It didn't. That was 7. This is 14. Right here, right? That was should have been the peak. It kind of was a sideways chopper. So now you got to assume that this next window from that low, right, which is 21 boxes over, or 21 bars, 21 quarter moons, that puts you out, which I like here, by the way, that puts you out into this zone, which is the lunar eclipse, right? So still has a chance to be bullish, but the call options might have to be rolled if you're going to keep the 4 left on. Now you've got a break-even trade, so you could roll them, or maybe roll them in just by 2, but you got to get out past August, right? So anyway, you can look those up. I ain't gonna mess with you. Save some time. Let me see. This is the juice. Let me get these out of here. The juice just been a trickle or 2, but we did have a pretty firm bounce. Still caught in the sideways throws. We did have the bear trap. Again, if you were gonna tickle yourself to be a buyer, that I like that, right? As a trading, if you did buy it down there, you know, I wouldn't get too greedy. I would assume it's gonna pop out this one, you know, as a quick trade. Or again, you know, if you want to be a hero, then you have to play it up here where I'm going to get stopped out, which makes sense a little bit. And actually, if you really want to, you can go up here, but I don't think there's enough time in July to probably knock that out. Wrong time of the year, right? This is a frost market. Definitely the wrong time of the year for a big pile driver move to the upside. Okay, we're in a bar chart now. And here's the commods that we're going over. Go to flip charts once you have your list made. I'm going to get rid of the volume. And okay. So this is the corn, and you can see the we did have a bull trap, man. You know how I love traps. This one was a bell dinger. We didn't have one here, but we had one here, and the end result was puke. So again, I have a bull trap here. I'm assuming corn's going to get down here and knock out this swing to get for every action is equal but opposite reaction trap. We're in a pretty bad way. You know, 50-cent break, 55-cent break doesn't sound like much, but it's bad enough. Again, you squish this chart down and you can see this is just December only, right? Let me look at a spot nearby, they call it. And you can see it's just a chopper, right, on the spot continuation. Just a dud. I mean, nothing you could do, but this kind of turns the corner now, kind of resembles this, right? This one took a while. Let me see how many days that was. Again, we're on a spot chart here. I'm going to go up here so you can see the damn thing. It was 123 bars, so that's kind of a nice Gann number. Let me see how many percent it broke. 25% down. So again, if you have a similar deal, Well, let me get it more exact. I never try to be exact in my methodologies. I used to be precise. Well, it doesn't look good. There's the exact same pattern, right? Not, it's off a little bit in percentage, but that's a pretty good drop. That's down there at 361, so that's your target zone. That would definitely bust out all this stuff and reset the gauge a little bit. I think that's important on corn. All right, let's move on. Well, let's just keep the nearby up. This is the July. Obviously, we're in. Uh, yeah, that's the July contract. So this is a spot or nearby. And again, you can see this is a putrid little pokey rally. Nice base though. So I'm assuming we'll go back down to somewhere probably in here. Maybe even take. Nah, I don't think we go down there. It'd be pretty ugly. I think probably right in here around 1070-ish. Okay, and that's a spot. Let's flip to the November. Wow, see, totally different look, right? Here was the previous highs back in the thin trade when it first popped on in 2022, and we were up on the high side of it. So hedgers beware, right? $12 freaking beans, buy some puts, for Christ's sakes. Simple shit. Don't be, you're $2 off the low. I mean, or three. I mean, buy puts, walk away. That's your hedge. Don't even have to worry about marketing the stuff. A little concerning. Obviously it could turn into a bear, or this could be a nice buying break. I think time's more the element here. You gotta, if this is a sideways chopper, and we're at the bottom end of the, I'm going to that secondary low. That's a 40-day decline. You can see we're already there in price, but the time is the element, July 9th. The tendency for beans, the July is either a big high or a big low, over the decades. Um, your biggest highs July 12th-ish, right? And your biggest lows were July 12th-ish. So, especially in the last 20 years, that 12 has been pretty key for some odd reason. Used to be like middle of June, right? But then it kind of rolled into the July mode. Anyway, let me move on. Here's the wheat. Again, we talked about being careful on this trap. I would have been short up here, even though we're drying a popcorn fart. Now we did get some rain. Now it's flooding. So, poor boys, they're harvesting. And what you don't want now on ready wheat is to have it sitting in water. It'll turn white, and that'll be the end of that wheat. I think if that wheat was a fuzzy little fluffy shit, I would be planting beans in it and not worrying about it myself, if you can, because I just finally hit grass. I've mowed 4 times now, and I finally hit a blade of grass. That's how dry we were. Now, of course, we've had 4 inches of rain, but we haven't. Yeah, the dandelions grew, of course, but we're kind of into this area, right, where this trap area. Again, makes sense that we could run some stops. This is the previous solar eclipse, and the green one is our last solar eclipse. So, kind of an area of support longer term for buyers, or if you're short, if you did sell it up there, it'd be a good objective, or at least a place to buy calls. Here's your meal. Popped out this chop back into the zone. Nothing to say there. Here's the cough again, kind of an ugly sister. Made a nice quailing top, right? We had our bull trap, right? And it was a big, nice, deep valley, right? So the projections, if you do your projections, right, this shows a pretty long-term bear on this thing. Not a short blip. Again, I use this as my little dot at the barrel of my gun to point, and I mean it points down there a ways. I won't go all the way down there. Too scary. But then that makes sense then that this is the speed line, right? This was your main move, your main pivot, and this is your head or your right shoulder, your bull trap, right? So this is your measuring stick, and of course you can see how it lines up. That's the importance of these swings. Don't mean to get a little preachy here, but it's an obvious one that's real time. And of course also any of these are important as well, right? A target, right? If I was short in here, I would be looking every day at this backside of this. I ain't really mathematical. Maybe it is. Don't really care, right? Now again, why did I stop here? Because the projection to me is an obvious 50%. That's a zone. So I guess let me redo it because I didn't quite have it on the button. Again, I hate being precise. Yeah, it does make a little difference. So around 187, around August 6th, is the backside of this crunch zone. That's a 50% target. Pretty logical. All right, let's move on. Here's the cotton. The only bull we had, was not a very aggressive bull. Maybe a 2x1 bull, where silver was an 8x1 bull. Totally different in magnitude. I do not believe the margins even increased on this bull, but it was a nice breakout, and one that I would love to see it break back here for a longer term correction and be able to buy into that. I'm assuming then that this is some important pivot down the road. The measuring stick, right? That's a $20 move times 5. That's a $100 move from this area. So it's, to me, just as a quick rough, I'm looking at $170 down the road. Let me see if that even makes sense on the day. Let's look at a weekly nearby. 170. Yeah, that's up here at the old highs. This pivot, if it's real, now of course it hasn't broken enough yet, but that pivot is pretty key. No different than this pivot. And I got crap in here. Again, this is a spot weekly, not a daily. We can see this is the pivot, and the end result was up here. Again, I measure everything times 5. A simple process, not trying to be too precise, but that's the advantage. Now again, it has to break back a ways. Let's move on. This is a weekly nearby on the wheat. Let me pull up the daily. This is the March of 2027 contract that we're trading. Again, the pivot was awesome, and then it fizzled out. Here is the juice. Again, let's look at the nearby daily there, which is July. Again, had a little pop here, but man, what a dud. But these moves are bigger than you think. Again, you got to remember where it came from. To me, this is the biggest bull market in history. Dwarf the silver move. This one was massive. We were killing trees. Bugs were eating them up, and it's got smashed, right? 62%. The end result, post-bull, 75%. Again, a pretty standard process. You can see here's my red dot at the end of my gun. It did project this down here. 75% was a logical area. 50%, 75, 80. Let me move on. Here's the crude oil. We rolled to D or SEP, excuse me. So it's a little tricky in how you read this, but again, this chart is just a sad sack too. I mean, it's typical. Crude oil or anything. Again, you got to remember, you get up in these levels, $90 out for the deferred in particular. There's going to be guys turning on some abandoned wells. It takes a little process. It's not instantaneous. Got to get them inspected and check everything. It costs a little money, but at these price levels, it's well worth it for them to pump out more of a minor amount. When it's at $50, it ain't worth it, right? So, but you get up here to 80 to 100, it makes more sense. You're going to get these wells hooked back up, and that takes time, right? So, probably didn't do it here because they have it. It takes a process, a couple months anyway. So that puts you out into here. So I would assume be a little careful of the bear. Again, system is not short yet. We got our stop right here on the SEP. We kind of bought it on the roll, right? Because I got out of the July. I don't know, 80. What does it say? 89.59. 89.59. So we bought it right in here on the close on the 22nd, I believe. Yeah, 22nd. So, and we got out of the July on the 22nd. Again, just to make it some type of official deal, right? Made 34 whopping $100. So you can see, we're up on this market obviously because we caught the pop. Here's nat gas. We talked about making new lows. Again, if you were forced, I would have probably bought this personally. Of course, if you ever follow me, I like the traps, especially when you have bull traps. I assume then you're going to have a bear trap. We had from this high to this high was about 14 bars. This one was about 19 bars. So 14 was right here. So it kind of makes sense a little. I mean, it's not exact, and normally it isn't, but it makes sense a little bit that this trap had some time zone behind it, not just it looks appropriate for the high, right? Now, what it does from here, I don't know. I would have probably already traded out of it. I assume I'm going to get stopped out. We do have a little profit. We got short here. And if you did buy it down here, this is the kind of a pivoty area. You might be able to run some stops as a projection zone. Here's, oh, for Christ's sakes, I went too far. Oh, well. Here's the E-mini S&P. I'll split it up when I edit the video, I guess. Here's, I've done this for so long, I can't change. We bought the S&P down here. We sold it here, so we had a little loser, but that turned into this monster bull. It's a little interesting to me that the S&P, which is an index, right, of all the S&P stocks, it's on its highs. They have a lot of little stuff you never heard of. Now my index is on its low, which is these, so again, the spread between the commodities and stocks are definitely on a widening spread, right? If that makes sense. So people are buying stocks, getting out of commodities. However you want to classify that. So it makes sense low, right? Trump protects the stock market a little more than the commodities. Farmers do get a lot of free money out there. The bigger get bigger and the smaller get smaller. Sad part of the way government handles their business. It's not fair, I don't think, but it is what it is. It's been that way forever. I've been trading for four decades. You know, in the 40 years, it's always been that way. From all the bailouts and the, I just think there's still some litigation from the early 90s yet. Anyway, here's the euro. Getting that pivot we talked about, just a flared out dud. Nothing to really preach there. Let's go to gold. Again, had a pretty good run. This is the solar eclipse, right? This dotted red line. Kind of an interesting area. You know, you can see the accumulation zone or the cardinal cross mixed with some other crosses of trend lines, all mathematical. So pretty key area, and we're having struggles here. Again, it just cannot rally. Of course, you know me if you've been listening to me. I think gold's done for a while. Um, I just margins are too high. You know, people are talking about ounces. You know, buying an ounce of gold. Well, who gives a rip? I mean, that's such a small deal. I got guys back in the 70s that bought, you know, 100-ounce gold bars and took delivery in silver at 5,000, right? So there's a lot of bars out there. Now, I can't imagine taking a 5,000-ounce bar of silver into a pawn shop and say, I want cash. But again, that's all relative. Bitcoin's kind of a similar deal, right? A lot of people bought Bitcoin dirt cheap and got out of it and made a lot of money. So no difference in silver. It's kind of a similar deal. We did go short this one, though, from the previous video. Stops are way the hell up there. Not how I would trade it. Personally, let me see. You know, no big deal. It's too much to risk. Again, that's where options can kind of come into play a little bit. And you might have to use a smaller increment. If you can't handle the $44,000 margin, no 5,000 ounce futures, you might have to go down to a mini, which is 1,000 ounce, 1/5 the size. Still pretty freaking high for a mini. Here's the cattle. Again, kind of had a buster. We're in a pretty good recovery here the last few days. So just a April, which I used to be able to chart April only when I had instant software. I can't do that anymore. So I guess it is what it is. We're in the solar eclipse. That's the resistance. Stops way the hell up there, but you almost have to. Let me see. Bitcoin is this one. We talked about this trade, you know, going up here, covering the close. It couldn't do it, man. This is the close on my chart, which is the March, right? And then we rolled it to June. It just couldn't get up there. And I talked about it. If it's trading like a currency, you know, you get these sideways slow ups and a boom. That's what we did, you know, slow up and then now a boom. Bitcoin's in a little bit of a cataclysm. We know from our recent past that it only breaks about a year. 50% though. We're at 52% down off the highs to the low here. 50% right here. That's too easy. I think it's probably going to break 62, 70% down. That's the tendency. On the big bull, it turns into a bear. I don't have the stats to back that up off my hand, but that's the tendency of all bull markets, right? Drop 70 to 80%. Gives it all back, I guess. All right, I'm going to pull the futures up. Hang with me. Here is the crude oil. What a coil. I mean, you can see this is the nearby, so that's a spot. Now, again, I mentioned this the other day, or last video I did. This is an inside coil, right? Now let's look at the D's, the one that we're trading. Made a new high, totally different look, right? Even the projections, though, like we looked up last video, I believe it was December 2028 contract, and the high was 72. So it's telling you that area support is $72 based on that, right? So again, it makes sense. We're going to knock this low out at some point. I don't know when, right? Maybe we'll go up and make a new high first. That's not the issue. The deferred contracts are giving you a pointer. And now this trades 10 years out in the future. I don't know if you can see all these little dots, but this was kind of the old high, right? That's at 73. So it makes sense. We're going to knock this area out, maybe get to 73, 72, that kind of thing. So, and then that might reload the gun a little bit. I don't know anything about crude. I know there's a lot of lips and jaw smashing out there. None of it I believe anymore. AI world has really screwed up the real truth. The chart will tell you. Just look at it and understand it. Let's move on to nat gas. This is a daily. This is the December that we're in. We talked about making a new low because we had the traps here. I assume we're gonna have a trap here. Had a trap here. So again, natural gas is a trap in some bitch, which I like, by the way. I don't like trading that gas long term. More of a 2-week and get the frick out kind of guy in that gas. You get to see why. The tendency to hold a good rally is not until you get into late summer, even the fall, prepping right with the weather of the next year, next February. Here's the S&P. Let me look at a spot there. Let's look at a weekly. This is a nearby weekly. It's getting, the breaks are getting less and shorter, shorter and less. Let's tell you that we're accelerating. We're undervalued. So be prepared for either one, a super monster bull rally, or a out of nowhere total hammer dog dropping the biggest move ever, right? I mean, so easy option trading for that market. Mm, Here we don't want to. Well, we might as well leave it there. You can see this is the euro, the FX. Just a big. Actually, this is a pattern you don't see too often. I kind of think this is a diamond pattern. So those are pretty obvious. When you make a new low down here, you go with it. You make a new high, go with it. That's the diamond. It's a good solid pattern. We're still on a spot weekly on the gold. I want to look at a daily. Dece only. Yeah, it's just a puke. I've been preaching high back in here. Didn't make sense what people were preaching. Now we have broke back, so, but again, you know me, I think 60, 75% is a pretty logical spot. Again, if you do the pointer, and this is the red dot at the barrel of the gun, this ain't going to be real accurate. But let's try to get it. So 33, there's 30. Again, I'm just going to do this rough. I can't quite see it all. But this would be kind of my target right here. I'm using 33%. So middle of November, which happens to be this. Again, the red one is the solar eclipse from 7-8 months ago. So the green is the current, which again did hit the resistance. It was a resistance for this pop up. So pretty interesting. That now of course we could get up to that. We could get up to this line. This is the downtrend line. I don't know if it's mathematical or not. It is important to me. Of course, 50% would be my next target down. I don't want to go there because people don't believe it anyway. Oh, market can't go down. We don't have any gold. Well, if you're out of gold, the highs are in. We're going to get hammered. That's just the nature of the beast, boys. Silver, oh, we're out of silver. Well, then highs are in. We're going back to 40 bucks. That's just how it's going to be. So anyway, here's you can see the silver. This is the Dece contract. Sloppy mess. Back here, I was saying margins aren't high enough. They did raise them to 66, back to 43. I have no idea what they are now. We had this trap, and this dang thing went up here and took this out. So we did have a trap here. Now, this doesn't look like much, but I think I was about under 50%. So even though it don't look like much because of this weird-ass rally, right? Foaming at the mouth rally, and now it's over. Just a typical deal. I've probably witnessed in my 4 decades of trading probably 100, maybe more, bull and bear market episodes, based on this greed, hope, fear. Right now we're kind of getting in the hope mode. We haven't reached the fear mode yet. Here's the cattle, another trappish market. We haven't really gone anywhere since October. We're going to be, here's your power move back last year on this contract. Let me look at a spot. Now remember this chart, right? Made a new high here. Let me look at a spot. Similar deal. Now if we had an April only, I think that would look much more bully, but I can't get it up anymore. You can just obviously see some type of parallel activity going on. That was 130 Ds, only 3%. I like cattle, but I hate trading them. Here's your parallelness, right? There's your 2 levels of support that make sense. Kind of the area of support that we did take out. Now we're on the backside of. So that's kind of your parallel channel. Makes sense a little bit. And you draw your Andrews pitchfork and all that other crap in there. Here's the Bitcoin. This is actually they're in August. No, it says June. Oh, I'm in August. Yeah. This is the August Bitcoin. I rolled it past July because I don't like rolling it every freaking month. So it's pretty thin out here, but you can see we did bust the lows. Now let's look at the spot again. This is the nearby. I'm going to assume we're going to make a new low. We've dropped 52%. Let me double check. It took 85 days, 52%, right? Now, of course, that's kind of to me, it's either that one or that one. That's kind of the red dot at the barrel of your gun. And again, you would have known this already, right? You'd have had this drawn in, down to 50%. Yeah, I can't get it quite to match up perfectly. There's the best I can do. That's 52%. Yeah, so here would have been my projections on time and price. I'd have been off a bit. Oh, damn it. Trying to get you. There we go. Oh, damn it. There. That was a good pointer, right? This would have been the time I'd have been looking at, the middle of May. It actually came a couple weeks later, so it missed it. But the target price was 50%. Of course, the next one down will be 62, right? So We'll just finish up my thought process. That's close enough. I think that's so. That next level down will be end of June. So a month from now. Um, it doesn't, it looks objectable here, but that's a still pretty good smash. But that's the 62% level. Now let's look at a weekly to see if that makes sense. It's around 50,000. Remember that. Here's the weekly, and this is our previous smash. Let's just draw that in. I'm going to duplicate it. That's the barrel. The little dot at the barrel again is right there, right? And there's your projection at 75%. Yeah, I won't worry about that. But it did go down to that next level. All right, so even though we're only at 43%, right? 79% was the actual hit. October 26. I want to keep that same time, and there's 79% if we fall the same. October 20, there we go, close enough. Right, so here's the two projections. This one is middle of October, and then our highs came in October 13th, so that would be a perfect annular, right? That's what, this previous break was a year long. This one will be a year long. So again, I know people don't think it can go down that far, and it sure seems like it won't. But first step, we got to get through this. So a pretty good objective there. We're back at these old highs and beyond them a little bit, so that makes sense a little bit too. I like this area if you're looking to buy where people are getting stopped out, right? What I call a bear trap area. That would be down in here, right where this is. So this is kind of my, spot. First, tranche, stacking Bitcoin. I hate that word. But if you got multiple cash levels, this would be the first area of choice, and saving some cash just in case we do break pretty hard down into here. All right, let me see. Anything else? Oh, well, this is the this is the July no bean spread. Now, that was telling us a while ago that this was not going to be good. New high to new low. Poof, some fundamental change. All right, let me exit out of here. Well, again, I'll be dividing this video up if I can get that done into an ag kind of sector and then into the others. I mean, I'll keep cattle down there because it's down mixed up with the silver and the Bitcoin. But again, we are short a lot, right? We're only long the crude and the S&P. That's it. The rest we're short. So heavy, typical, right? We just got done with Gann's 90-degree zone. We're feeling the after effects of that. The ones you probably need to be aware of is the S&P. That's always a wild card. I'm sure the puts are dirt cheap. You can go out probably buy December puts for little or nothing as a little protection against your dividend plays or whatever you got, or the Dow puts or the NASDAQ puts. You can use these options in your favor and not get out of your stocks, or buy puts in those outright markets unless you have a different slug of different ones. The indexes are a little better for that. All right, I'm going to sign off. Everybody have a careful, today's Friday. Well, it's Friday now, midnight. So we're on to the last day of the week. I did this a day early. I hope everybody has a good weekend. Recharge your batteries.